Folks, we better buckle up. It is here. We just crossed the point of no return, and there may be no coming back from this de-dollarization that is accelerating. And President Putin of Russia just said the quiet part out loud this week. The world is moving away from the US dollar, he said quickly, and he said the US is killing the US dollar on purpose. It's hard to disagree with that. So what we witnessed this week was unprecedented in American history. America needed roughly 2 centuries to accumulate its first $1 trillion in debt. We just added the latest trillion in approximately 5 months, and now $40 trillion in public debt. That happened this week. The Treasury Department intervened in the bond market. Long-term interest rates surged to levels that we haven't seen in nearly 2 decades. And the US dollar began showing major new cracks this week. These aren't like 5 unrelated financial stories. They're all connected. So we have some huge news to get to today that I want to break down. I want to walk you through exactly what happened so you can protect your family, because most Americans have no idea that any of this is taking place. But it's going to affect every one of us in the coming months, from the value of your savings, the interest rate on your mortgage, the cost of borrowing money, and ultimately the future of the dollar itself. And oh, you're going to love this. As I told you in the past 2 weeks, gold, silver, copper, gold mining stocks have all been on a tear. Rarely in the past few decades have we seen this type of tear. Economist Peter Schiff has been saying it loudly. This week he was saying it loudly. There's a clear breakout right now. And in a couple of minutes, I'm going to profile an incredible sponsor, which one shareholder owns 71% of. It's unheard of. It trades on the NASDAQ, and I consider it a top quality stock that I'm going to talk about later in the show. But first, let's get to the news. Let's begin with the number that should stop every American in their tracks: 40 trillion. It's almost impossible to wrap your head around this. America's total public debt, $40 trillion, first time in history. The Congressional Budget Office now projects another $1.9 trillion deficit this year. Annual net interest costs are expected to exceed $1 trillion. Think about that. We're spending more than $1 trillion every year just servicing the money the government has already borrowed. Besant says that the way out of this is to grow our way out of it. Listen.
The 40 trillion is a big number. It is smaller when we look at the publicly traded amount, because our Social Security funds and other government entities hold a substantial amount. And what we're going to do, we're going to have to grow our way out of this.
Okay, but we're not in a world war. I mean, some might argue what's going on with Iran and Russia is a world war, but not in the way that we think of like World War I, World War II, right? It isn't happening during a Great Depression. We're not in a Great Depression. It isn't even happening during an official recession. So we have to grow our way out of it? Washington is now running crisis-level deficits as a permanent feature of the American economy. So if our economy is booming, as Trump claims, then how do you grow your way out of it? I don't get it. Like, if we're booming right now, and we're not growing our way out of it, how do you get there? So that's the first major warning sign. The second major warning sign appeared in the bond market this week. Investors have been selling long-term U.S. government debt, driving the yield on the 30-year Treasury above 5.3%, its highest level since 2007. And that matters because these yields help determine borrowing costs throughout the economy. Mortgage rates, corporate loans, government refinancing, countless other interest rates are connected to what happens in this market. And when those yields began moving sharply higher, Treasury Secretary Scott Bessent stepped in. The Treasury announced that it would at least double the size of certain buyback operations for bonds in the 10 to 30-year range. Bessent said that those purchases could become even larger. Why? Why would they need to become larger? Well, because it didn't do shit this week. Like right after he announced it, had a little effect, and then went right back. President Trump was asked about this, and he basically admitted, if this doesn't work, we're just going to have to use our U.S. military.
We have many types of intervention. That's one. The ultimate intervention is our military. And if we have to use that, we will.
What? Like, okay, what? So the U.S. military is going to solve the bond market problem? Okay. So what Bessent did isn't the same thing as the Fed just printing money through quantitative easing. But the message to the market is unmistakable. The Treasury is now trying to influence the long end of the yield curve by repurchasing its own debt. Hey, if the Fed's not going to do anything, we're just going to jump in. We're going to use debt. It's a snake eating its own tail. And I frankly have goosebumps just thinking about how the U.S. has come to this moment. It's so damn shameful. America is collapsing right before our eyes. I'm taking the kids to my home city of Philadelphia to walk through and see the Liberty Bell and go to Independence Hall. And I'm just so ashamed of how we've gotten to this point. The U.S. Treasury has to step in to micromanage the sovereign bond curve. That's a clear signal to distress to the financial markets. Just so you understand, for decades, Wall Street has operated under this 5-5 rule. You probably know it if you're savvy financially. China grows at over 5%. 30-year bonds are always bought up by the Chinese Communist Party under 5%. Well, today China is growing at less than 5%, and yields are above 5%. So this is a massive blow to the global financial system from both China and America. It's unbelievable, actually. So the free market can no longer absorb this. So how are we going to absorb all of this debt? Higher interest rates, of course. So that's the first real story. The problem isn't simply that America owes $40 trillion. The problem is that the cost of carrying that debt is rising, and Washington continues to borrow nearly $2 trillion more every year. Now look at what happened immediately after the Treasury announced these expanded buybacks. The dollar weakened. Gold surged above $4,600 an ounce. Silver surged again this week, back towards $70. And you looked at all the gold mining stocks. Boom, boom, boom. Gold climbed more than 5% during the week, while the dollar index fell back towards 3 months lows. I mean, literally the moment Besant opened his mouth this week, gold shot straight up. Markets are beginning to ask a dangerous question. If the United States must continually intervene to prevent its borrowing costs from spiraling higher, what exactly is the dollar still backed by? Like the U.S. military? Debt? Like what is the U.S. dollar even backed by? Confidence. That's it. Confidence. That confidence is what Washington says it will use to honor its debts. Confidence that the Treasury market will remain stable. Confidence that foreign governments, central banks, financial institutions will continue accepting and then recycling U.S. dollars. But confidence is disappearing faster than people realize. And this is where Redacted's own reporting becomes especially important. Redacted has learned through sources this week with knowledge of these discussions that 7 major European banks have already begun putting the framework in place to connect with an emerging BRICS currency and payment system. Let that sink in for a moment. Despite sanctions or blowback from the ECB, these banks are doing it anyway. European banks turning away from the US dollar system towards Russia and China in a major way. According to our sources, phase 1 of that implementation has already been underway for the past several weeks. Phase 2 is expected to begin during the first quarter of 2027. This has not been publicly reported. The only piece of the story that was revealed just a few weeks ago so far is that Deutsche Bank's announcement that they've been named as the first non-Chinese bank to settle transactions in foreign currency across borders between China and Europe. Sorry, US dollar, you're no longer a part of that discussion. And by the way, if you search for information about European banks connecting with alternative BRICS or Russian payment infrastructure like the Mir system, you're going to be told that sanctions effectively prevent them from doing that. But it's happening. It is happening. That's the quiet part of phase 1 right now. So ask yourself, why would 7 major European banks be quietly preparing alternative settlement channels with Russia, China, and the BRICS nations? Because they can see the same cracks forming in the dollar-based system that the markets can see. I spoke with finance expert David Morgan this week, who said people need to wake up. This collapse is irreversible at this point.
We are entering the final phase of a debt-based monetary system that cannot go on much longer.
Of course, this doesn't mean the dollar disappears tomorrow. Reserve currencies don't collapse overnight. What happens first is diversification. Banks create alternative payment rails. Countries settle more trade in their own currencies. Central banks buy gold. Treasury demand weakens. Slowly, transaction by transaction, the dollar becomes less essential. And then one day, the world realizes the system has already changed. So that's the news update part of today's video. Now I want to tell you about today's sponsor, which is tied directly to everything we were just talking about with the weakening of the US dollar system. So today I am profiling a gold copper exploration and mine development opportunity on US soil and the amazing sponsor of today's video, U.S. Gold Mining, Inc. Here is their ticker on your screen. It is USGO. It's easy to find on the NASDAQ. U.S. Gold Mining Incorporated owns the large gold and copper Whistler project, which is located just 100 miles from Anchorage in south central Alaska. U.S. Gold Mining recently announced the results of an initial economic assessment study that was completed on the Whistler, a preliminary economic assessment project. Now, the PEA provided a positive outlook for the Whistler project, which is located in a top-tier jurisdiction, the United States of America. So get this, the PEA estimates the Whistler project to produce 2.7 million ounces of gold and almost 600 million pounds of copper, plus nearly 6.6 million ounces of silver over an almost 15-year initial mine life. I love this. I need to show this to you. Take a look. USGO trades at 0.1x the price net asset value compared to peers. That is a significant discount. That's exactly why I'm bringing this to your attention. So if you combine, or if you comb through the gold, copper, and silver, the gold equivalent, this models an estimated life of mine total metal production of almost 3.6 million gold equivalent ounces at an average of 246,000 gold equivalent ounces per year. So if you just use the consensus gold price, which is $3,200 an ounce of gold, which is much lower than the current $4,500 an ounce of gold, where it is right now, the project has an estimated payback of capital after just 2.1 years. I love that too. So here's what stands out to me. Apart from that valuation discount that I can't get out of my mind, the PEA incorporated just one of 3 existing gold copper deposits on the Whistler project. Just 1 out of 3. On top of that, the company is currently undertaking ongoing exploration programs this summer to test some of the numerous exploration targets in the Whistler Raintree area. So U.S. Gold Mining and the Whistler project are well positioned to benefit from a number of additional market catalysts. So let me break it down for you. The tailwinds from Washington, D.C., right? Alaska is clearly important for the Trump administration. Trump issued an executive order on day 1 in his presidency, and it was called Unleashing Alaska's Extraordinary Resource Potential on Day 1. Remember that in the Oval Office? Grabbed the pen and signed it on day 1. The administration then issued a second executive order called Immediate Measures to Increase American Mineral Production. That executive order directs government agencies to take immediate action to facilitate domestic mineral production to the maximum extent possible, including copper and gold. And then in addition to that, to the federal support, state-level policies are also strong. So Alaska Governor Mike Dunleavy, strong proponent of economic growth and the infrastructure to support mining in his state of Alaska, and he personally visited the Whistler project himself. The state of Alaska, under Governor Dunleavy's leadership, is moving forward with a planned road system, the West Sistina Access Project, that will connect the Whistler project with Anchorage, Alaska. So along with the governor's support, the project has also been visited by the Alaska delegation in Washington, D.C. That's U.S. Senator Lisa Murkowski, and that's U.S. Representative Nick Begich. Now, in addition to gold, the 2026 Whistler project mineral resource includes estimated copper and silver resources, which were both recently added to that list of critical minerals in the United States and are being prioritized for exploration development by the Trump administration. So gold, copper, and silver are at or near all-time high prices right now. Thirdly, the company's ownership structure is attractive. Take a look at this. 71% of the outstanding shares are held by the parent company. Another 4.3% held by management and insiders. So over 75% of the shares are tightly held. So let me recap why I'm telling you about this NASDAQ company, U.S. Gold Mining. The PEA results indicate the potential for a robust base case opportunity at the Whistler Gold Copper Project with potential for further growth. Gold, copper, and silver at or near record highs. There are strong political tailwinds, including Trump's executive orders on Alaska and resource development, and the company's tightly held ownership structure. So guys, do your own extensive research on U.S. gold mining for yourself. Make sure you review U.S. Gold Mining's annual report and other filings with the SEC when you research this opportunity. I'll have links to those items in the description below, and we'll see you next time, everyone.